Thank you so much, Madam Chair, and good afternoon to all of you, honourable members of the Economic and Monetary Affairs Committee, ladies and gentlemen, whether you are currently in Brussels or linked via digital devices. Thank you so much for yet again giving me the opportunity to speak to you today and to have a frank and timely discussions about the ECB monetary policy and about the accountability, which are the topics that you have selected on the occasion of this dialogue. What I would like to do is, first of all, say a few words about the euro area economic outlook. And then I would like to focus my remarks on the monetary policy and in particular on the role of the asset purchases, as you have identified as one of the two topics. And then I will share some thoughts with you, some considerations about the accountability arrangements. So, turning first of all to the euro area economic outlook. The impact of the pandemic, and I will refer to the pandemic because whether it's COVID-19, whether it's coronavirus, whether it's this new names that is coming up, the pandemic will be my reference. So the impact of the pandemic is still being felt across the euro area. People are losing jobs, people are losing income, businesses are facing difficulties, and prospects about the future remains uncertain. Now, while euro area economic activity rebounded in the third quarter, the recovery remains incomplete, uncertain, and uneven. Consumer spending has resumed significantly, but consumers remain cautious owing to anxiety about their job and about the level of income that they will receive. Similarly, business investment has been picking up, but weaker demand and elevated uncertainty continue to weigh on firms' investment plans. It is in that context that the job retention schemes and the national guarantees on bank loans has remained critically important factors in reducing uncertainty and softening the impact of the pandemic. The latest ECB staff projections foresee annual real GDP growth at minus 8% in 2020. It's a slight improvement compared with previous projections. We were at minus 8.2, we're now at minus 8. Plus 5% in 2021, slight reduction compared with where we were, and 3.2 in 2022. Euro area real GDP is only expected to recover to pre-crisis levels in late 2022. The strength of that recovery remains, however, highly dependent on the evolution of the pandemic and the success of the containment policies. The public health crisis will continue to weigh on economic activity and poses downside risks to the economic outlook. The sharp drop in economic activity earlier this year has weakened price pressure. Annual headline inflation in the euro area stood at minus 0.2% in August and is expected to remain negative in the coming months, reflecting the effects of earlier declines in energy prices, a stronger euro, and a temporary reduction in the value-added tax rate in Germany and also in Ireland. ECB staff project annual inflation to gradually increase from an average of 0.3% in 2020 to 1% in 2021 and 1.3% in 2022. So what have we done? The monetary policy measures that we have taken since early March are providing crucial support to the economic recovery and are helping to safeguard medium-term price stability. Without our measures, we would be facing a deeper economic contraction and more severe disinflation. Our policy support during the crisis has been structured along two main axes. One, liquidity operations. Two, asset purchases. First, we have provided access to central bank liquidity at very favorable terms and over long tenors to help maintain the supply of credit from the banking sector. To this end, we have adjusted the terms and conditions of our targeted long-term refinancing operations, called TLTRO3, which strengthen the incentives for banks to lend to the real economy. For a period of 1 year, banks will be able to borrow at negative rate, which can be as low as -1 percentage point, under the condition that they lend to the economy. And largely in response to that recalibration of our TLTRO, we have seen a very high take-up by banks. So that was on the liquidity operations front. On the asset purchases, we have launched the Pandemic Emergency Purchase Program that I will refer to as PEP, to ensure the smooth transmission of our monetary policy and to ease the overall monetary policy stance, thereby helping to offset the downward impact of the pandemic on the projected path of inflation. The PEP launched an initial envelope of 750 billion euros, that was in March, and we increased it by another 600 billion euros in June, for a total of 1,350 billion euros altogether. We have also decided back in June that we would conduct net asset purchases under the PEP until at least June 2021, and in any case, until the Governing Council judges that the coronavirus crisis phase is over. In the current environment of elevated uncertainty, the Governing Council will carefully assess all incoming information, including indeed developments in the exchange rate, with regard to its implications for the medium-term inflation outlook. The Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner, in line with its commitment to symmetry. Now let me turn to the second topic that is of interest today, which is the accountability. I think one of the reasons the ECB has been able to deliver a strong policy response very quickly during the crisis is thanks in part to its ability to act in full independence, as is set out in the treaty. Now, this independence, in turn, relies on effective accountability mechanisms to ensure that the ECB fully pursues its mandate, as is also, as you know, enshrined in the treaty. Delivering on the ECB's treaty obligations is a shared challenge for both the ECB and the European Parliament. While requiring effort and commitments from both sides, it is in both our institutions' interest. To be effective in assessing the ECB's action and relaying people's concerns, accountability practices need, in my view, to meet three different criteria. Let me go through each of the three. First, they need to be commensurate with the ECB's tasks and responsibilities, implying that they have to evolve in line with the complexity and scale of the ECB's measure. Second, they need to be underpinned by timely and adequate information and transparency arrangements. And third, they need to be based on mutual trust to ensure constructive discussions on critical and difficult issues. Over the years, our two institutions have worked together to build and strengthen their accountability relationship well beyond what was provided under the treaty. And indeed, I would argue that this relationship, as it has matured over time, meets the three criteria that I have just spoken about. First of all, the ECB's accountability practices have evolved over time. With the launch of the European banking supervision back in 2014, specific accountability arrangements were established for the ECB's supervisory arm. We also strengthened our relationship to reflect the greater complexity of the ECB's monetary policy measures. For example, when the ECB was taking unprecedented action during the exceptional circumstances caused by the pandemic, I held an ad hoc exchange of views with the political group coordinators of your committee. Moreover, we have agreed to interact more closely in the context of the ECB's strategy review and ensure that our regular dialogue plays a key role in how we inform about this exercise. The outcome of this strategy review will also provide an opportunity for us to consider the ECB's accountability process and practices. The ECB's accountability has also been enhanced by a better flow of information between our two institutions. As we discussed back last February, this requires us to continuously aspire to communicate as clearly and as openly as possible. And as part of this endeavour, and also in response to parliamentary and public demands, the ECB has already started providing more detailed information about its asset purchases and current holdings on its website. Now, today I can announce an additional transparency measure. From now on, we will publish on our website the opinions of the ECB Ethics Committee for cases of conflict of interest and post-mandate gainful employment by the members of the ECB's Executive Board, members of the Governing Council, members of the Supervisory Board. This new initiative complements the single code of conduct for high-level ECB officials and demonstrates our strong commitment to integrity and good governance. It will facilitate public scrutiny, thereby enhancing trust in the ECB and ultimately in the decisions of the ECB. This leads me to my final point on good working relations requiring trust. Trust, on the one hand, that criticism of the ECB reflects concerns raised by European citizens on matters that fall within the ECB's mandate. And trust, on the other hand, that the ECB listens and takes such criticism into account. This trust forms the basis of our constructive dialogue, both formal and informal, and ensures that our relationships deliver. And so it does. In response for your call for the ECB to reflect on ways of reducing the burden associated with the collection of statistical and prudential data, an activity which costs the banking sector several billions each year, we propose practical solutions in cooperation with other European authorities and the banking industry while improving the quality of the data collected. At the very beginning of my term in office, you invited the ECB, in full respect of its mandate and independence, to reflect on how its policies could support the green transition. The ECB's Governing Council has now decided that from 2021 onwards, January the 1st actually, the Eurosystem will accept bonds with coupons linked to certain sustainable performance targets as collateral for credit operations and outright purchases for monetary policy purposes, provided that they comply with other eligibility criteria. This is a change. Building on these three criteria that I have mentioned earlier on, I think we should continue to do what we have been doing all along, ensuring that our accountability practices remain commensurate by letting them evolve in a flexible manner and by adapting them in line with the demands for scrutiny from European citizens. And because we can only make improvements if we are aware of people's expectations and concerns in relation to the ECB and its policies, we are inviting everyone in the euro area to share their ideas, their comments, through the ECB Listens portal on our website. I can tell you that there have been many visitors already and many comments. So let me conclude. Our regular exchanges are crucial in explaining the ECB's action to people across Europe and to you as their representatives. This is even truer in testing times when the people of Europe expect the EU to rise to the challenge. A recent survey that you have commissioned shows that more than 2/3 of Europeans would like to see the EU have more competences to deal with crises such as the pandemic. Citizens clearly look to the EU for answers, and you play a central role in ensuring that such answers are forthcoming. The measures adopted thus far by national governments and the European institutions are reinforcing our monetary policies. At the same time, our policies are creating the most favourable conditions for the full impact of structural and fiscal policies to be felt. The Parliament's calls for an ambitious European response were heard by European leaders. It will now be important to ensure that the next generation EU funds are used not only in a timely fashion, but also in a way that enhances long-term growth and support common EU objectives. If we get it right, next generation EU could be just the game changer that Europe needs in terms of modernization, in terms of resilience, and in terms of prosperity. I know that you are all working very hard along those lines. Thank you very much, Madam President or Madam Chair, and I turn the floor back to you.